All right, today is Tuesday, November 4th. It's just about 11:25 a.m. And we're now a week out from the Federal Reserve's meeting. They met on the 28th, Tuesday, October 28th and 29th. They had their press conference and announcement on the 29th, where they announced the quarter rate cut in federal funds rate. And so, what did mortgage rates do? If you've seen a couple of these videos, you can probably guess by now that unfortunately, mortgage rates have risen since the cut in the Federal Reserve's rate that they enacted on Wednesday, October 29th. And if you look at the last month, we'll scan out a little bit more. The last meeting, right, we talked about this was September 16th when the Federal Reserve met and cut. And at that time, prior to that meeting, the 10-year Treasury was falling, touched 4%. They announced the cut, the press conference, and then it rose back up. Again, another indication that just because the Fed is cutting doesn't mean that mortgage rates are going to come down. In fact, they rose a little bit. The direction of mortgage rates are tied, as we've talked about, directly to the 10-year Treasury, but they are less correlated to what's happening with the Federal Reserve's interest rates, and can even be more correlated to what's happening with the Federal Reserve's balance sheet or portfolio. So this is a chart of the 10-year Treasury, which is what the banks use to set the mortgage rates on a 30-year fixed rate and other mortgage loans. And you can see that 10-year Treasury got below 4% as we were heading into the meeting, the FOMC last week. They were meeting here. The meeting was, here it is, 28th, Tuesday. And then when they made their announcement on the 29th, 10-year Treasury shot up. Thankfully, the move hasn't been dramatic. But despite the cut in the federal funds rate, we have not seen a reduction in mortgage rates. In fact, they've risen a little bit. This is an article from Barron's: Mortgage Rates Climb After the Fed Cut. Here's why, what really matters for home buyers. Essentially, the market was paying more attention not to what the Federal Reserve was doing on the 29th, but what they were signaling for their upcoming meeting in December. And prior to this announcement, there was a high probability, 80 to 90% chance that the FOMC would be cutting again in December. But Jerome Powell, the chairman of the Federal Reserve, in his press conference walked that back and basically signified that the December meeting will be another live meeting, and there's no guarantee that another rate cut will be coming in December. And as a result, the 10-year Treasury has taken an uptick, and consequently, we've seen an uptick also in mortgage rates, just slightly. The 30-year now at Broadview, as of today, is at 6%. I think a week ago it was at 5.875. And the 15-year was at 5.25 a week ago. It's now at 5.375. So a very small uptick. It's not dramatic in any way. I don't think it's going to have an overall impact on buyers' decisions. But again, remember that cutting doesn't mean mortgage rates are going to come down. Trustco has remained steady at 5.75 fixed. They were at 5.75 a week ago, and that rate has not adjusted. Typically, Trustco meets on Wednesdays. If they're having a rate setting meeting, it's going to be on a Wednesday. And so in the afternoon, this could change. But I think given the slight adjustment in the 10-year Treasury, it's unlikely that this Trustco mortgage rate will change this week. But of course, if you have a loan officer that you're working with at Trustco, you can always call them and try to get a better sense of where that's going. The bigger issue is, or the bigger question that you may have is less about rates, and so what's happening with the overall capital region real estate market. And again, despite the fact that rates are higher now than they were 12 months ago, we continue to see price appreciation on a month-over-month basis. So for September of 2025, the median sale price was $335,000 across the entire capital region. That's up 4.7%, nearly 5%, certainly outpacing inflation if you compare to the same time, September of 2024. We've actually broken this down a little bit further, and this is kind of an overview. And as you can see, Albany County median sale price was up 8.3. Median sale price was up in Albany County by 8%. Saratoga County median sale price actually fell a little bit, 3.6%, and then Schenectady County median sale price was up 4.5%, and Rensselaer County has had a dramatic increase, nearly 20% rise in median sale price. This slide, which just covers the 4 counties in the capital region, breakout, I think further supports the theory that in counties where or in markets where the median sale price is below the national average, and as of September, the national average median sale price was around, I think, 420, 430,000. But in markets where the home prices are below the median sales price national average, my theory has been that home prices or appreciation will outpace the national average. So nationally, for September, we saw home prices appreciated around 2%. Region wide in our region, we saw them appreciate at 4.7%. On a county by county basis, there's a similar trend, right? Albany County, which is still below the national average, is seeing greater price appreciation, 8%, than say Saratoga County, which has a median sale price skewed towards higher end homes. They're actually seeing a slight decline in median sale price for that month, a month of September 2025 compared to 2024. And then in Schenectady County, again, median sale price of well below the national average has appreciation. And Rensselaer County, one of the fastest growing price appreciations that we've seen in the capital region, is up nearly 20% September 2025. September over September 2024. Again, a reminder that a lot of what you heard at the front pages of the Wall Street Journal or top of the news hour on CNBC that told you that, well, home prices are going to come down if we can just cut those mortgage rates. Sadly, it hasn't been true. And in fact, home prices are rising and mortgage rates are rising, right? And it's only become more expensive for buyers. And I think in our market, and Rensselaer County is a great example of this, where home prices are well below the median sale price nationally. We are going to continue to see price appreciation, and I think that's going to move along. This is, I think, a helpful chart that we put together because sometimes buyers ask us and sellers ask us, when can you get the best price for a home? And in general, you can see that I think I share this more from a buyer's point of view, and I like to point out to buyers that when you're purchasing a home in the springtime, you're probably going to end up paying more for that same home than you would if you were to purchase it now. The fourth quarter, especially November, December, those are some of the best times to be looking for a house right now because there's the least amount of competition. People who are putting their houses on the market between November 15th and January 1 during the holiday season, they tend to be a little bit more motivated, and there's less competition. So they're willing to probably take slightly less than they would have in the middle of the spring. So from a buyer's point of view, going under contract now on a home, if you went under contract today in the first week of November, you're likely that contract in November is going to show up potentially in December data, but more likely in January data, right? So these low January monthly sale prices are from homes that were purchased in November and December. And so ultimately, these higher April prices, these are homes that were purchased in February. You got to backdate it 60 days. These high prices in June, these were homes that went under contract in April. And these high prices in July and August, these were in May and June. So, I think the question becomes, if you're in the market on the buying side, is it smart to wait to see if rates come down? I think they probably will next year, or should you take advantage of the fact that there's less competition now and move on your purchase? I think this chart really gives you a good idea. So that's a recap for the capital region real estate market and how the Federal Reserve and the interest rate cuts are impacting our local market. And I'll try to jump on in the next few weeks as we get more potential economic data on inflation and jobs report at the end of the month.